So we will now proceed to the illustrative cases. So we will use the problems that are found in your book. So just refer to page 262. We will start with problem 9-1. Walleye Company provided the following transactions. January 1, the entity sold merchandise for 500,000, accepting a note of 500,000 for 6 months with interest to be paid at maturity at 12%. So what would be the entry? So on January 1, we debit notes receivable 500,000 and we credit sales. On March 1, the entity discounted the note without recourse. So remember, pag without recourse, transfer na nato ang right to the bank, but wala na tay obligation sa bank in case nga mo default ang ato ang customer. Okay? So the entry for March 1 so would be the following. But before that, we will need to know how much will be the debit to the cash, how much will be the loss, and then to be able to complete the entries. So first is we will start with the principal. We have 500,000. And then the interest is 500,000 times 12% because we need to get the interest for the full term times 6 over 12. Okay, ngayong 6 over 12 guys, 6 months man siya. So the total interest for the entire duration is 30,000. The maturity value is the sum of the principal and interest of 530,000, and this amount is used to get the discount. So the discount is 530,000 times the discount rate na 15% times 4 over 12. Ganong 4 man siya. So the entire duration is 6 months. And from January to March, January 1 to March 1 is 2 months, diba? January, February. And so 6 minus 2 months, that would be 4. So the discount would be 26,500. So the net proceeds would be 503,500. So debit cash 503,500. Now we need to get the carrying amount as of March 1. So how many months? So 2 months man siya. So 500,000 times 12% times 2 over 12. So 500,000 plus 10,000, the carrying amount of the note receivable is 510,000. Then we have the net proceeds is already solved. So you have 503,500 minus the carrying amount of the note receivable, which is 510,000. So the loss on discounting would be 6,500. So debit loss on note discounting, 6,500, and credit note receivable, 500,000. The customer fully paid the bank in full. So, himbayad man siya in full. O niya, wala bang puntay tulubagon. So, sorry, napaday. Credit to interest income. Balik sa ta. Okay, so debit, cash, 503,500. Then, we have loss on note discounting. You have 6,500. And then, credit note receivable, 500,000. And we have the interest income, kaning 10,000. So, that's credit to interest income. On July 1, the customer paid the bank in full. Since the customer paid in full, so there's no problem with that. Aside from that, it's without recourse, so we don't have any liability sa endorsee or sa bank. So that's why on July 1, there would be no entry. Okay. Next, we have problem 9-2. We have moral company. We have provided the following transactions. On March 14, we have sale of merchandise, 2,050,000 to a customer FOB destination, 2 over 10, and 30. So on March 14, that's debit to accounts receivable, 2,050,000, and then credit sales. On April 7, receipt of a 60-day 12% note dated April 5 from the customer. The face of the note was the amount of the invoice minus freight charge of 50,000 paid by the customer in connection with the March 14 sale. So on April 7, the entry would be notes receivable because that's 2,050,000 down minus the 50,000 freight charge, and then freight out 50,000 and credit accounts receivable 2,050,000. Okay, so ang accounts receivable gipulihan og notes receivable. On April 20, the note of the customer was discounted. So what will be the entry? So first, we need to get the net proceeds. So the proceeds is equivalent to the maturity value minus the discount. And the maturity value is equivalent to principal plus interest. So the interest is based on 60 days because the duration of the note is for 60 days. So the total interest for 60 days or 2 months, that would be 40,000. So the maturity value is 2,040,000 and the discount is based on 2,040,000. So how many days naman ang unexpired? So first we get the total duration of the note nga 60 days and we will deduct the days nga ni-lapse na or ni-expire. So from April 5, that's the date of the note, until April 20, so that's 15 days. So 60 minus 15 days is 45 days. So 2,040,000 times 15% times 45 over 360. So that's 38,250. So our net proceeds here would be 2,001,750. Okay, next is we need to get the carrying amount in order to compute the gain or loss on discount. So the principal is 2 million and the accrued interest receivable is equivalent to 2 million times 12% times the expired portion, which is 15 days. So that's 10,000. So total carrying amount is 2,010,000 and we're going to deduct that from the net proceeds. Since our net proceeds is lesser, ang atong madawat kay mas gamay. So that's a loss of 8,250. So debit cash, 2,001,750. Loss on discounting, 8,250. Credit note receivable discounted, 2 million. And credit interest income, 10,000. On June 4, receipt of notification from the bank that the customer dishonored the note. So, wala mo bayad si customer. Accordingly, the entity paid the bank the amount due including protest fee and other charges of 10,000. So, kita may nakabayad na noon. Okay? So, again, nabagingon diri kung with or without recourse. So, since silent ang problem, di ba, ingon to nga kung wala gi-specify, then that's with recourse. And by the way, sa instruction here is a conditional sale. So, this is with recourse. So, on June 4, we're going to establish the accounts receivable because of the dishonoring of the note. So, you have 2,040,000 plus 10,000. So, that's 2,050,000. And then credit cash, 2,050,000 because we're supposed to pay the bank. Then note receivable discounted and credit note receivable because we need to close the note receivable discounted and also remove the notes receivable kay gi-transfer naman siya to accounts receivable. On July 4, receipt of cash from the customer of the full amount of indebtedness plus interest. So maningil ta sa customer nato. Okay? Panilingan nato tong maker kay wala man siya mo bayad sa bangko. Unya kita may nakabayad tungod sa iyang utang imbes na siya untay mo bayad nato, di ba? Kita na noy nakabayad sa bangko. So tilingon nato ang customer. So first is we credit the accounts receivable nga 2,050,000 and then we're going to compute for interest income. So that's equivalent to 1 month nga interest, additional nga interest. So that's from June 4 to July 4. Kaya nilabay naman po ang usa ka buwan usa siya ni bayad. So na ay additional siya nga bayron nun nga interest. So 2 million times 12% times 30 divided by 360. So that's 20,000. Again, nganong 30 days man na siya, kay 'di ba dapat nibayad unta siya June 4, unya nibayad man siya July 4, so nay 1 month nga atong kwentahon nga interest. And then the total collection is 2,070,000. So that's for a conditional sale. So this is with recourse. Now let's proceed to another problem. This is a secured borrowing. So this is 9-5, stable company. So first is on August 31, stable company discounted with recourse a customer's note at the bank at a discount rate of 15%. So on August 31, okay, so we will debit the net proceeds. So again, we need to determine the uh, original term of the note. So the note was received on August 1. The term is 90 days and the face amount is 5 million with an interest rate of 12%. So 5 million times 12% times 90 over 360 because 90 days is the 90 days would be the entire duration of the note. So the total interest for 90 days is 150,000. So the maturity value is 5,150,000 and this will be used as the base for our discount. So times 15% discount rate times 60 over 360. So nganong 60 man na siya ma'am? Kay August 1 man ang note unya gipa-discount man siya August 31 so nilabay ang 30 days. So 90 minus 30 days is 60 days. Then, to get the gain or loss on discounting, we need to compare the net proceeds and the carrying amount. So, how much is the carrying amount? That's 5 million plus 50,000, which is computed as 5 million times 12%. So, ani sa interest rate times 30, kay 30 days man ang nilabay from August 1 until August 31. So, that's 50,000. Total carrying amount is 5,050,000. We deduct that from the net proceeds here. So the loss on discounting is 28,750. So debit cash 5,021,250. And then you have interest expense because this is a secured borrowing. Remember, 'di ba? Pag conditional sale pa ni siya, so loss unta ni siya. But since this is secured borrowing, so ang i-debit nato kay interest expense. So kung mangutan na o pila man ang loss on discounting sa secured borrowing, ang answer would be wala siya loss kay ang iyaha mang debit kay interest expense. But here we are following the computation in the conditional sale. Pero kani siya interest expense kini siya. Kumangutan na siya, how much is the interest expense in the secured borrowing? So, ang answer kay 28,750. Then, credit liability for notes receivable discounted. Remember nga ang secured borrowing, liability for notes receivable discounted ang account title and then interest income is 50,000. Then, since the customer paid, so igura na to i-close ang liability for notes receivable discounted and credit notes receivable. Okay, so wala tay tulubagon ani na kay nibayad man si customer. So ato na ning i-close ning liability for notes receivable and i-credit na ang notes receivable kay totally wala naman ni siya kay himbayad naman ang customer. Next, we have 9-6. So this is with recourse and then secured borrowing. So on January 1, Machete company sold land with carrying amount of 1,500,000 in exchange for a 9-month 10% note with face value of 2 million. So on January 1, the entry would be note receivable and then credit land and credit gain on sale of land. So that's land 1,500,000 and gain on sale of land 500,000. Then on April 1, The 10% rate properly reflects the time value of money. On April 1, the entity discounted the note with recourse. The discount rate is 12%, and this is a secured borrowing. So, how much would be our interest expense? Okay, so interest expense ang gamiton. Again, because this is a secured borrowing. So, kung mangutana ang sa problem, kung pila ang interest expense, so ang tubag ana niya is the difference between the net proceeds and the carrying amount. Kung conditional sale siya, nya nangutana siya interest expense, so walay interest expense, di ba? Kaysa conditional sale, ang interest expense, ang pangan man niya kay loss man on notes receivable discounting. Dili man siya interest expense. So, zero ang interest expense kung ang pangutana is conditional sale ang transaction. And then, the same goes if ang problem is secured borrowing, yan ang utana siya loss on discounting. So, wala po siya loss on discounting. Kaya wala may account title nga gidebit to loss on discounting if it's a secured borrowing. So, dapat sakto po ang ato ang answer according po sa account nga gigamit sa problem. So, the net proceeds here would be, again, we need to get the interest for the entire duration of the note. That's 9 months. And then the discount is based on the remaining months or the unexpired nga months. So since January ni siya, January, February, March, 3 months man ang nilabay until April 1. So ang mabilin is 6 months. So the proceeds would be 2,021,000. Then, to get the accrued interest receivable, it's based on the expired na nga portion. So, again, January, nya February, March, nya April 1, that's 3 months. So, 2,050,000. So, get the difference, that's 29,000 interest expense. So, again, kung secured borrowing, interest expense ang account title. Kung conditional sale, that's loss. Loss on discounting. So, debit cash, 2,021,000. Then, debit interest expense, and then credit liability for note receivable discounted, and then interest income. So, pag nangutan na again, yung secured borrowing, nangutan na siya, how much is the loss on discounting? So, that would be zero kay ang atong account title here kay interest expense man. Ya kung conditional sale pa ni siya o nangutan na siya interest expense, it would also be zero kay wala may interest expense sa conditional sale. Ang gigamit adto di ba kay ang loss on discounting. Then you have again credit liability for note receivable discounted and then interest income. On October 1, the maker dishonored the note. So kita man ang endorser, so naatay liability. So the entity paid the bank the maturity value plus protest fee of 10,000. So on October 1, the entry would be accounts receivable. So again, nganong accounts receivable ni siya, kay ang note nga gidishonor, it becomes an ordinary accounts receivable. So maningil ta ani sa ato ang maker. And then credit cash for the payment, so 2,160,000. So we have the correction on the date for this one. So this is supposed to be December 31, okay, and not December 1. So December 31, the entity collected a dishonored note receivable in full plus 12% annual interest. So since the duration is from October 1 until December 31, so our interest will be good for 3 months, October, November, December 31. Okay, so credit accounts receivable, 2,160,000. This is being closed, kaya na-collect naman nato. Then we will recognize interest income. So since the problem states that the interest nga 12% is based on the total amount due, which is the total accounts receivable, so 2,160,000 times 12% times 3 months. So again, October, November, December, 3 over 12, so 64,800. So the total collection is 2,224,800. So this is different with the previous problem. Katunay default, which this one. Oh, this one is based on original face value. Katong nag-default, di ba si customer, and then nibayad siya nato at tanawa. Ang iyang interest is based on the face value nga 2 million ug dili sa 2,050,000 kay nag-statement sa problem nga based on original face value siya dili sa total amount due. Kay kung based pa siya sa total amount due, kaniya to ang gamiton. 2,050,000 times 12% times 30 over 360. But again, since it's based on original face value, so based siya sa 2 million. And we go back to 9-6. So sa 9-6, since this is based on total amount due, so ang basis for the interest income is based on the 2,160,000 nga accounts receivable.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.